Imagine waking up one morning to find that every major market in the world, stocks, real estate, crypto, commodities, has plunged overnight. Headlines scream panic, people rush to withdraw money, and experts on TV pretend they saw it coming, even though no one warned you in time. But what if I told you that every global crash, from the Great Depression to the dot-com burst, from the 2008 meltdown to the sudden 2020 collapse, followed the exact same secret pattern? A pattern so clear, so repetitive, so historically accurate, that it has never failed to appear before a financial disaster. And the most shocking part? That exact same pattern is happening again right now. It's quietly forming behind the scenes while most people go about their day completely unaware of the storm building above them. Today, I'm not here to spread fear, I'm here to give you clarity. Because once you understand this hidden cycle, you won't just see crashes differently. You'll start recognizing them before they happen. For decades, economists, analysts, and investors have debated why markets rise and fall. Some blame politics, others point to interest rates, wars, or unexpected crises. But when you zoom out, when you look at the big picture of the last 100 years, something incredible becomes obvious. Markets don't collapse randomly. They move in waves. Human behavior moves in waves. And these waves create a pattern so powerful that it shows up before every major crash. In this video, we're going to break down exactly what that pattern is, how it predicted past global meltdowns, why it's repeating again today, and how recognizing it can help you stay prepared when others are blindsided. This isn't about guessing dates or making wild predictions. It's about understanding the rhythm of the financial world. Because the people who understand this pattern don't fear the next crash. They anticipate it. They prepare for it. And sometimes, they even benefit from it. So stay with me, because by the time you finish this video, you will see the financial world through an entirely new lens, the next global crisis. One to surprise you. For decades, the financial world has seemed complicated, filled with graphs, charts, equations, and experts using language that only they understand. But behind this maze lies a simple, repeating cycle that drives every major rise and fall. This hidden pattern is known as the tri-phase bubble cycle, and once you understand it, the chaos starts to make sense. The first phase is quiet growth. This is when the market slowly climbs. Investors feel cautious but optimistic, and stability appears normal. Then comes phase 2, euphoria. This is where things get dangerous. Prices rise faster than ever. Media headlines turn overly positive. And people who never cared about investing suddenly jump in because everyone else is making money. It's the classic FOMO wave. Finally, we hit phase 3, cracks. This is subtle at first. Liquidity gets tight. Debt piles up, insiders quietly exit, and small shocks trigger bigger reactions. It's here that the pattern reveals itself clearly, yet most people ignore it. Because when markets feel unstoppable, nobody expects a collapse. But history shows that once these 3 phases complete, the crash isn't a possibility. It becomes an inevitability. And this exact pattern is appearing again today. If this pattern were just theory, it wouldn't matter. But the stunning truth is that it has appeared before every major financial crash of the last century. In 1929, stock prices soared far beyond reality, fueled by cheap credit and speculation. Then the cracks formed, loans tightened, insider selling increased, and a small wave of panic spread into a historic collapse. In 1987, markets surged 40% in a single year, far too fast. Behind the scenes, automated selling programs and high leverage created the perfect setup for what became Black Monday. Then came the dot-com bubble in 2000, where excitement over the internet pushed companies with no profits to sky-high valuations, repeating the euphoric second phase perfectly. By 2008, a housing boom fueled the same cycle: easy loans, rising prices. Then a sudden liquidity freeze that triggered the global meltdown. Even the 2020 crash followed the cycle. A period of rapid growth, record highs, and then the shock that exposed underlying fragility. Each time the pattern appeared. Each time experts ignored it. But the pattern didn't fail, not once. And now, unbelievably, we're watching the same signs build again. Right now, the global financial system is showing nearly identical signals to past pre-crash moments. We are deep inside phase 2, the euphoria stage. Stock markets are hitting record highs even when economic fundamentals aren't improving at the same pace. Corporate and household debt are at historic levels, far beyond what most economies can realistically support. Housing prices in many countries have climbed so quickly that average families are being priced out entirely, another classic warning sign. Central banks around the world have tightened liquidity, increasing interest rates, and making borrowing more expensive. This creates stress on individuals, businesses, and governments who relied heavily on cheap money during previous years. Meanwhile, defaults are quietly rising: credit card defaults, auto loan defaults, business bankruptcies, a small crack in the wall. Manufacturing output is slowing, global trade is weakening, and consumer savings are shrinking. These aren't isolated problems. Combined, they mirror the exact third-phase danger zone of previous crashes. Investors are overly confident, governments are overly stretched, and markets are overly inflated. The truth is simple. The pattern is repeating almost perfectly. The world is more exposed today than most people realize. When this hidden cycle reaches its final stage, the next events typically unfold in a predictable sequence, not by date, but by behavior. First comes the liquidity squeeze. This means money becomes harder to borrow, companies struggle to refinance their debts, and banks tighten lending standards. Then comes the asset pullback. Investors who once rushed into markets begin quietly selling before prices fall. This isn't loud, it happens slowly, behind the scenes. Once enough insiders exit, the market becomes fragile. Then a trigger event, big or small, creates shock. In 2008, it was subprime mortgages. In 2020, it was a pandemic. But the trigger is rarely the real cause. It simply exposes the weakness already built into the system. After the shock, panic selling spreads. People rush to protect their portfolios, and markets begin dropping faster than they rose. Media headlines turn fearful, confidence collapses, and policymakers scramble to respond. This is the classic correction phase. History shows that once Phase 3 completes, the downturn is almost unavoidable. It doesn't matter whether it starts next month or next year, the direction becomes clear. The global economy is entering a stage where stability becomes fragile and volatility becomes the new normal. The goal of understanding this hidden pattern isn't to panic or predict the exact date of a crash. It's to stay prepared while others stay blind. And protecting yourself doesn't require complex investing knowledge, requires simple, practical steps. First, avoid emotional buying. Most people are drawn into markets during the euphoria stage, right before the crash. Recognizing the cycle helps you avoid that trap. Second, diversify your assets. Putting everything into one category, stocks, crypto, or real estate, makes you vulnerable. Spreading your investments reduces risk in a downturn. Third, build an emergency fund. Crashes hit hardest when people have no savings and no flexibility. A few months of cash can make all the difference. Fourth, reduce unnecessary debt. When liquidity tightens, debt becomes dangerous. Paying down high-interest loans gives you more security and less stress. And finally, stay informed. Understanding trends, watching global indicators, and recognizing shifts in the pattern helps you remain ahead of the curve. Crashes don't destroy everyone, only those who are unprepared. When you know how the cycle works, you protect your future, your income, and your peace of mind, even when the world around you becomes uncertain. As we step back and look at the complete picture, one truth becomes impossible to ignore. The financial world isn't chaotic, it's patterned. Every rise carries its warnings, every bubble has its echoes, and every crash leaves behind a blueprint that repeats through history. Today, you've seen that blueprint clearly. You've learned the hidden cycle that shaped 1929, 1987, 2000, 2008, and 2020. And you've seen that the same unmistakable signs are forming once again. This isn't about fear, it's about awareness. Crashes don't destroy the people who understand the cycle. They destroy the ones who never saw it coming. The next global downturn may arrive suddenly or slowly. But one thing is certain, the pattern is already in motion. And now that you understand it, you're no longer on the outside looking in. You're ahead of the curve. You know the signals, the stages, and the psychological traps. You know how preparation, not panic, protects your future. If this video helped you see the financial world through a new lens, then make sure to like this video, subscribe, and share your thoughts in the comments below. Do you believe the next crash is coming? And what signs do you see around you? Your voice matters, and together, we can stay informed, stay aware, and stay prepared for whatever comes next.